The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, and we've got a very interesting, well, first of all, thank you to our hosts. Great program. Just look at this chart here. This is the E-mini. And what has it done? Done something very interesting. Chapman Wave 5, a peak D at 24.01, round number high. This is the March contract. You know, I can keep using the March contract until the last minute, but I'll switch Tuesday or Wednesday. I'll switch to the June contract. Meantime, at 23.71, it's down 75 cents. No big deal. Dow's down 37 at 20,865. S&P's down 1.90 at 23.70. What we're looking at here is there's a chance that this peak D is saying in the weekly chart is finally saying stochastic's pulling back to the 91% area. It was in the 97s. Amazing. Pulling back. MACD's flattening out, has not turned down. And what it's suggesting is a consolidation is unfolding. Limited upside. The downside is becoming a little bit more open. 120-minute chart says rectangle formation, probably an arch pattern that's going to form. I would not be surprised if we're really close within. If it isn't today, it'll be tomorrow that we're starting to head towards the downside. Meantime, back at the ranch, let's just go on because what you've got, the Qs are holding beautifully. The QQQ series at 131.38, 131.68 was the high on the 1st of March. That was the speech high. And we've gone in a rectangle formation. Well, let me just do this. I want to draw it so this is the pattern that I'm going to be looking at. There's a cup formation in the daily chart between the 1st and what's happening Friday and right now. So far, it's failed to make a new high. The MACD is very weak. Stochastic is very weak at 73%, but it has bounced up. The weekly chart is holding beautifully. A sideways move, lower highs and lower lows last week. Has not broken down until the Qs start trading at 129.30. That's 2.25 points away from where we are. I cannot even think that the Qs are going to give me anything more than a sell signal in the daily chart before I wait until there's a sell mode. And that sell mode, as I say, will only come about if the price goes under 130.87 is one tip off. But really, the stochastic and MACD are suggesting it's underway now, that the technicals are weakening. But the low of 130.14 made on the 9th of March, you got to see a close below that before I can even think of a sell signal, even though the MACD and stochastic are very poor. Why? Because in my methodology, there's a pattern that we look at, and it's basically there are two ways of looking at a price. Think of it as a balloon, or think of it as a kite. Both have a string attached to them. With a kite, the idea is to hold it back and have the air pressure on the upside, the current, push the price higher. But as long as you're holding the string, you're going to be able to adjust. A balloon is pretty much the same thing, but the idea of a balloon is that you want to let go. And at some point, even though the air might, the current or the hot air might start to fizzle, and theoretically, you should see a gravitational drop in the kite or the balloon. When that air current comes back, that balloon should go higher if you're not holding the string. A kite will go higher. Anything can happen to a kite. You know, a kite can turn around, it could go sideways, could do a lot of things. And even with the wind, if it's in the wrong direction, it can even go down very quickly and sharply. So there's a difference. And I'm looking at this and I'm saying, I'm thinking kite. I'm thinking that there's a string attached and that the Qs have got very limited upside at this point. But I don't know yet whether the downside is going to break, but I do know that the upside is kind of limited. All right, so let's go on. Those are the parameters. The break into the 132.30s. I have to admit that's a breakout. That's a leg E in the weekly. That's very positive. All right, so now let's get on to the, I want to look at gold. I believe that gold is getting really close to some kind of basing formation. I don't think it's quite ready yet. Gold is up about 2 at 12.03. Silver is up, or it was up now. Yep, it's up 0.05 at 16.98. I think that the dollar still has just enough residual strength right now to suggest that the gold, let me do the GDX. I don't want to just make a statement because the GDX is really the GDX is up 21 cents to 21.94. It's actually had two very nice days. Been repelled so far at the 9-period exponential moving average in the daily chart. Let's look at the week, the 120. Yep, leg B in the 120-minute chart. MACD is very strong. Stochastic is very strong, but stochastic is not over 80%. It's at 71%. And that says, be careful. If there's a pullback in the GDX below 21.50, 21.59 is the 9-period moving average. So if there's a pullback of about 44, 45 cents from here, then my suspicion is that the dollar has just enough residual strength right now to say, hey, I'm gonna kind of struggle to get into the 102s again, but until I break down and get back into the 100.50 or lower area, gold will only have little attempts at running. That's just my thinking right now. I believe we're getting closer and closer. I was asked about it, I had an email about it, and I said, to buy the nugget. I said, okay, you can do it. But I'm really looking more at nugget is trying to form a base. My outlook now would be to be buying gold, the GLD, buy the calls further out, maybe not even to March, maybe looking into April. Could even go to May. And I think that's where it's going to succeed. So let me put this into the package. The Dow and the S&P and the other indices, not so much the Qs just yet, although I think it's going to be the case, have limited upside. The downside, the way I'm looking at the charts, the work I did over the weekend, when I had a chance, so I was away for the weekend, it's going to be really tough for the markets to really break out. I think at this point, unless the Fed does something that the market just loves, and I don't know what they can do. I mean, everything now is heading towards the next huge drop will be a negative, perceived in the market as negative. So I think it's the downside that we're really looking at. Okay, let's go on with this. So that's gold, silver, the GDX, and the dollar we've just done. But what's really important right now is if you're looking at crude oil is on its way down, 48.35. It's broken the key support levels. And this is just saying that H pattern that we were looking at in the monthly that I said could turn into a lowercase m, it's one of the techniques that I always talk about and that I teach, is about to test some kind of support right there. In fact, on the monthly chart, it's right there at 48. If it goes to 48.30 or lower, it's broken that support. So this is a pretty important moment for crude oil. I'll be back because we want to talk about bonds. We want to talk about what's going on in the bonds at 116.94, down 31 in the TLT. We need to talk about it. Basil Chapman will be right back.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI, oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, we're back. So I'm just showing this chart of the 10-minute E-mini. This again is the March. And you see the rally that started at about 1 o'clock or so on the 10th of March. And ran from the 2360 to 25 level to the high of 2370, 325, about 10 points. Then it arched over and it held at about a 1/3 retracement. And then it started up again, peak ABCD, pulls back, has a rogue wave spike to the upside for an E, and then collapses. Not collapses, pulls back quite sharply. Starts a brand new move at 2368.50. This morning at 10 past 7, let's see, 10 past 7 and 20 past 7, double bottom, and goes to peak ABC, pulls back, holds a 9-period moving average, and pop, it goes to the leg D, and that was at 9:40 this morning, and now it's giving it back. The arch formation is potent. Reason being, you see the way it held at 1/3 level and then started running, even though the MACD and stochastic pulled back very sharply, but the price held. Now what we're doing is that the MACD and stochastic are pulling back sharply, and the price is pulling back. And we've gone more than 1/3. We've actually gone 2/3 down, retracement. So I'm looking at this, and my suggestion is that if you're looking at the E-mini as a gauge, then if the E-mini, which is only down 277, Dow's down 47, in other words, there's weakness, greater weakness in the Dow this time than the S&P, which is kind of the modus operandi I prefer to see as a market tell. It's suggesting that there is still a little bit of intrinsic support, and that support is going to be tested a little later on today. And if by the end of the day the Dow's down 65, S&P finally catches up and is down maybe 5.60 or $6, then I think we might have seen Friday, we might have seen that gap up, that move to the upside and turn down as possibly some kind of a more serious indication that we're making lower lows and lower highs. The TLT at -29, look, what we've done, we've made an H formation. It's absolutely imperative that there isn't a close this week underneath 116.80. But at the same time, if there is a bounce, 119.25 is a 9-period moving average. That'll be a spectacular move to get back some of the losses from the last 2 weeks just in one fell swoop to the upside. But what's really intriguing is that if I'm looking at the monthly chart of the TLT, we are on the cusp of breaking quite important support, and it's not parallel support to the highs that were made. Let me just do that right now and show you exactly where that would be. Let's take that as right there. Yeah, the 105, let's call it the 106 to 104 area, because 105 is a 200-period exponential moving average. So that's going to be important in terms of the channel, but in terms of this little mini inside track, Chapman wave inside track propellant buy zone, if it cracks that and closes under 115 to 114.30 is the support. If it closes under that this week, that's really negative. Okay, that means rates are going to go higher. That means this breakout that I'm showing you right now in the weekly chart is more likely to be a leg B to the upside and not an F. And that's going to say higher rates coming, just it depends on where it's going to stop, but right now it's going to the upside. Now let's go on, because I wanted to show you high-grade copper. High-grade copper is having a rally here at 2.63. It's up 0.36. It's within that rectangle formation that we've been looking at for a while. I'm inclined to want to raise this for now to round about the low of last week. And so that's really the narrow trading range. The band rectangles can remain a potent vehicle of upside, downside, support and resistance for a long period of time. What I like to do is to identify it first and then start to narrow it down. And I'm narrowing it down to 2.71 is kind of a breakout to the upside, and 2.55 on the downside is a breakdown under that. Okay, now what I need to do is, what am I missing? EUR, USD, that's the euro-dollar currency pair. Leg C kind of stalling here. It's going to be very important. It needs at 1.067. It needs to get to the 0.0714 will start to break to the upside, and 1.06550 is going to be downside, breaks to the downside. And now we want to look at the USD, JPY, and that is in fact pulling back in a leg B. This is that, it looks like very much like the dollar weekly, and it's going to be really important because it closed in the 100. It's 114.61 down 0.12. If it can finally break above last week's high, if it can break above 115.51, that'll be very positive. And if it takes that last week's low of 113.55, I'd say be careful. It could be retesting the lows. So this is a very important week, because I think with so many of the different aspects that I'm looking at suggesting that the upside is now limited, we will know by Thursday or Friday whether or not it's true, because what we're really looking at is that the Fed holds the ball, and whatever they decide to do is going to impact the market quite strongly. So we made a peak F in the weekly chart of the Nikkei. I was asked about that way back in October of last year. And then there was a pullback, and then it went to a G, and that became a much sharper headwind for the downside. And then we plunged down to what am I looking at? NG. I'm sorry, natural gas. I thought that is really weird for the Nikkei. This is natural gas is rallying right now. It's at 3.039. It's in leg C. It looks like it wants to go higher. So UNG is a play. I should have looked at that earlier. UNG A, B, in leg B. Am I correct? Yep, leg B, and it's acting quite nicely. Nikkei, NK, there we go. The Nikkei made a peak D. Oh, we got so many charts that are making cup formations in the weekly. Look, cup formation, a peak D pulls back. What do I mean by a peak D? I'll show you in a minute. I'll explain it for those of you who are new to my work. In every serious move, there are 4 stages. We go peak A is the first peak. Higher than A goes to a leg B, then a peak B. Higher than peak B goes to a leg C, then a peak C, and then you get to a D. A D, other things can happen, as you can see right now. Look at the sideways move that's been attained in the Nikkei futures. So this is a continuous contract. And it's in leg B in the week, in the monthly, and acting very nicely. So let's look at this daily, because the daily chop, chop, chop is the one that says, I have a rally and then I fail. I have a rally, then I fail. I'm making slightly higher highs and slightly higher lows. So let's call this a trough right there of importance. And now we go peak A, peak B. Nothing here. That's lower. That's lower. That's higher. So that's C. Yeah, going to a leg D in the weekly. I suspect by tomorrow we could make a leg D at above 19,635. Yeah, 19,636 will start a leg D in the daily, and then I think we might see a pullback. Basil Chapman, Tiger Technicians Hour, and we have got the Dow down 52, S&P's down 3.5. Not bad action. Not great action. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So a question about the XBD, which is the Arca Securities and Broker Dealer ETF. In leg B in the monthly, that is huge. That is huge. And it is a tell to say that we might have a pretty sharp pullback, but it should go to higher highs in 2017. The weekly is in peak G/Z. Everything about it suggests that it's a G. There's a whole configuration that I look at, which suggests very strongly that we're going to be pulling back even deeper from here. It's at 218.19, up 53 cents, but that's no big deal because it's made a peak E in the daily, E up in the daily, and it's in trough A, B, B, and it's just forming a kind of an arch from there, call it an arch formation. But it could bounce, and it could bounce from 218 all the way to 220, maybe 221.5, but then I think it comes back down. So yeah, that together with Goldman Sachs, which has almost the same configuration, peak E in the weekly, leg A only in the monthly, and D in the daily, with weakening technicals. I think Goldman Sachs is coming down. I think it's going to break the key support of 249, round number. It's at 245.61. The high that day was around number of 249. So 245.61 is the number to watch. It's at 247.43, and I think it's going lower. What's really important about this is it's suggesting that there's a consolidation and that the key low that was made in February, the week of the 3rd of February at 227.05 in Goldman Sachs, that's really, I'm not sure we get down there just yet in this move, if it's going to be at all, but I do believe that we're going to go towards the 240, 237 area in this consolidation. Hope that helps you. GT. Now, Dave wants to know, morning, Basil. Looking forward to your Monday show. Yep, that's right now. If time permits, would you review Costco for me this morning? Thank you, Dave, California. So, Dave, I'm going to look at Costco. And one of the things about retail, and what's fascinating is that the malls are still really full. I mean, they are really full. The malls around here, let's put it this way. I don't go to all the malls. I'm just saying, at least the malls that I've been looking at, reluctantly, have been pretty darn full. Costco made a leg D this month in the monthly chart. The technicals are not that great, but it did go to a higher high. In fact, I think it's an all-time high. Yep, it's an all-time high in leg D. And Costco wholesalers. And let me move this away here. And it's starting to pull back in the technicals in the weekly chart. What's really important about the daily chart, I'll have to notate this quickly. Let's go to the most obvious lowest low bar. That's that bar right there. That's the low bar of January the 3rd at 158.51. And then what do? You really count each successively higher peak. Peak A, peak B, double B. So peak C, peak. The objective is to get you to a D at least, and it can go to E and even an F. So remember the song that I had, the market goes up, the market goes down, supposed to buy at the low and sell at the high. Snap, snap. But you know what we tend to do? We buy at the high and we sell at the low. Chapman wave is what you need. Buy with a Stoke and the Olmec deed. Follow the price and wait for a peak. Higher highs is what you seek. There I see. MACD turns up. Stochastic turns up. You merely count the waves. You get to a D right there. That's the objective always. Then what happens? The wave goes to A and then to B. Even the anticipated C and D. That's when it flashes a cautionary light. But all you got to do is make your stops real tight. And that's what we always do at a D. Remember all the charts that we've looked at, get to a D. There's the D in the monthly chart. So what do? That's when it flashes a caution light. But all you got to do is make your stops real tight. Suddenly it goes to E and F. A bell rings so loud it can make you deaf. So what you gonna do? Which way to go? You sell at the high, high, and you buy at the low. That's the Chapman Wave song. We haven't done that for a long, long time. This one fitted perfectly. Look, the stochastic, when you went to that E and F, stochastic was fading. The MACD started to turn down. The histogram was going all the way down to the 0% line. That was the clue. I should have seen it. And then it gaps down on you. So it gives you the F. Often it doesn't even give you that. It gives you that F. The bell rings so loud it can make you deaf. And that was the clue. And then I wish I remembered that. I heard it, and then I forgot completely that Costco was out with earnings. I don't know. Maybe we would have taken some kind of position here because it was going to be an F. But in the meantime, that's the story. So I'd be real careful. I wouldn't be rushing to buy any of the retails. I just don't see it yet. And one of the things, Scott, I don't see that. Scott is, they're joking in the dead. Scott is on hold. No, he's not. So Costco's at 164.60, down 76 cents. You see that gap right there? If there's another gap down tomorrow, there's an island reversal. We just missed it today. Look, the low on Friday was 164.98, and the high today is 165.11. Just missed making an island. What a huge island reversal. I'm going to put this in here. I can't put it in as an oval. I'll put it in as a rectangle. And I'm going to color it yellow. Let's see what happens tomorrow. If the market gaps down tomorrow, then we could see Costco gapping down for the second big gap. Full color, let's make it yellow because that's what we're looking at. Biggest gap we've seen. But then it would have to be there. Okay, so we're going to watch this closely. I wouldn't be touching Costco. I wouldn't be touching any of the retail stocks. It just doesn't make sense. We had a rather vicious weekend. Left Friday soon after my show. Went to the airport. We were going down to visit my daughter in North Carolina, and we're hopefully going to be able to meet with our wonderful host, John Logan, the 8 o'clock show, and we got snowed out, iced out. They couldn't fly out. It was a big deal. I had to quickly switch planes for the next day and make another booking for Saturday morning. So we didn't, I would say we slept at the airport. We didn't sleep the whole night. It took a long time until about 1 o'clock to finalize what was going on. And then there wasn't enough time to go back home and come back again at 4 in the morning. So it went off. And then what happens is that was Delta. And then JetBlue, the flight that I booked to go, switched to flights quickly. They take off at 6:10. Well, not quite take off because we left the terminal at 6:10, Boston, and we were on the runway, and they had to de-ice us because it was just an incredibly freezing, the snow blowing and everything, and it was a freezing, so they had to de-ice us. Well, the special de-icer fluid that they have, I've got some great photos, it goes splash, and it goes right into the windshield, and it hits the pilot. The icer liquid goes through the windshield and hits the pilot. Well, so we were delayed there because they had to come back, and then they had to get the pilot to the hospital to go and wash out his eyes. I mean, this is serious stuff. Anyway, everything was fine. There was a message to say that he'd been there, and the eyes were washed out. He was fine, but we had to get a replacement pilot, and so now they're making a decision. I'm saying to myself, wait, if they have to de-ice it again, they can't de-ice it again because the same thing's going to happen. What happened is that there was just enough warming for them to say, we don't have to de-ice, and you can take off, and finally took off. So I missed having a chance to meet with John Logan down there, and then we came back, and there was snow when we arrived in North Carolina. Anyway, we're back, and everything's fine, but that was quite a trip, so I'm a little hazy this morning.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We were looking at SBGI during the break, Sinclair Broadcasting Corporation, Group A shares. I'm suggesting that it's got a peak G in the daily, that it should consolidate. The monthly and the weekly look really good. Let me just check 3250, 3250. All right, it's 2 there. So this is in leg. Here's the weekly, peak A, peak B, and leg C. So it's a leg C. It's very strong. Monthly is still very strong. I just think it's going to pull back. Wouldn't be surprised if it tests the 38s. That's where, just call me again at 38s and tell me you're looking at it, because that might be where it's a good place to enter it. But if you're long, just hold it. UMH, is it UMH you're looking at? You have a question okay. Yeah, UMH. Let's look at it in a moment. This is UMH Properties. We've got a caller online. We've got Scott in Safety Harbor. Scott, how are you?
You know, I get a little bit, I'm so used to that excitement, that volatility, that on days like today, it's just hard to sit still.
Yeah. So are you sitting still with CX, or you're in and out?
I have a position in it right now. I don't know, it looks like it's really testing that and could move towards the 40-ish range.
So, yeah, what I'm looking at, folks, is CX, which is CMEX SA. It's a Mexican cement company trading at $8.62, a penny. I think it's trying to form a base, and that's really important. And it's making slightly higher lows, but it's not making higher highs. It's kind of making lower lows, so lower highs. So I think it's kind of trapped in at the moment. But we've been talking about the low of 6.45 made on the 24th of February and the low of 6.46 on the 28th. And that is suggesting to me that if it becomes a support level, and I would say to you, don't give up on those positions where it pulls back to that level for a pop-up, because you know how to play those bounces very well. But that's also very important. Why? Because if $6.40 is taken out as support, you've got to expect this to go to the 200-period moving average in the 8.20s. But at this particular point, it's still like a day trading, an intraday trading stock, which you've done very well. I'm going to say keep it that way, but be prepared that right at this particular point, it's going to be more difficult, because if it look, today didn't even go above the 9-period moving average so far today, that is.
Yeah, the range has gotten tighter and tighter and tighter, and I really am not going to start scaling until the probably 8.55. I had another question about BAC with this Fed meeting coming up.
Yes.
And I'm kind of surprised that it hasn't moved at all.
Okay, there are a couple of things. You know, Bank of America is trading at 25.32, up a penny. The consolidation pattern that we're looking at, it's had a number of gaps, but the last gap says to me that the high that was made on the 28th of February, the day before the speech with a high of 24.70. I would not be surprised over the next two weeks, regardless of what the Fed says, because remember, very often it's buy the rumor and sell the news. So if the Fed says we're bumping up again, we might see everyone totally surprised when all of a sudden the Bank of America, Goldman Sachs, which looks like the same thing, and the XLF suddenly pulls back. I mean, they deserve. If you looked at this chart, and it was a person running a race, you would say, "Wow!" At this point, they deserve a bit of a break. Go have some orange juice and a drink of water. And that's really
the way I look at things. I look at it almost as a living entity, like you just described it. People don't like my analogies like that, but they've worked for me.
Yes,
and
correct.
I just think, like you said, it's just this racer has been going up and up and up, and it's just kind of sitting on that one level on Everest, and just kind of okay right now, and a little bit tired. You know,
needs a new set of tires. That's all.
Yeah, absolutely. So I really don't see much happening. I'm with you on the Fed meeting. I think it's just we've just gone up so fast and so furious.
Incredible move. Yep, 20% in some cases.
I think we're still waiting for those infrastructures to actually take place, and if we can get some sign of that in some way, shape, or form, because right now there hasn't been one bulldozer started. So.
Right, and the other thing is that I think this is also telling us about Trump, because this is a Mexican cement company. It's done very nicely, and it keeps running on any slight bit of optimism, and it's up and away. So this is something that I think that the whole media and most of the politicians and probably us as a public need to know, that Trump is always negotiating, and that what he says is only a negotiating statement, no matter what it is. The reality is that if Mexico was not going to be able to do anything, CX would be down. It'd be almost bankrupt right now. They're still viable. It's still going to be there. We still need their cement. So we've got to look at this and say, don't listen to the news in terms of trying to establish positions. Look at the charts, concentrate on the charts, and say, hey, this is the reality of things. The financials have done extremely well because of anticipation, but there's the reality that the rates have gone up. I'm showing a chart right here to say there's a breakout in the 30-year, the 10-year, and the 5-year yields. They've broken out. Got it? That's the reality. No matter what's said, they've broken out, and I think we've got to treat it as if to say everything that's said is a negotiating stance, and you've got to look at the reality. The reality is bank stocks have done well because not just the anticipation, it's the reality. But now there's a little bit of a breather because sometimes it's buy the rumor, which is also part of the news. But just to have a rest, it's still a favored area. The financials, I think, are still going to be in play. It's just a rest
and not a problem with the market, because the VIX is just, I mean, can you believe how low the VXX is? I mean, we're like $17. I mean, this is crazy.
Correct. Yeah, well, actually, that's not even an issue. There's the TVIX, which is 2 times long the VIX index, and if I remember correctly, it was in the 8s back in 2000 and what was it, 15, I think it was, something in October when we had that very sharp decline. And then it split because it went down to 3 or something. It split 20 for 1, and then it split again, and now the third time it's back in the 4.04 area, because these things are just trading vehicles, so we can't use that. What you really have to look at is the VIX itself, and the VIX itself is at 11.84. It had the election spike that ran up into the 2171 area, trading now at 11.84. The VIX is going to rally. I think it's going to rally fairly soon.
I agree with you, Basil, and I tell people, ask any sea captain as you're going out in your boat with no life jackets on a blue sky day, and he'll laugh at you, because no matter how clear and blue it looks, the storm will come just as soon as, I mean, just like the sun coming up. I mean, it's going to happen. So all these people that think that there's no correction, that the VIX will keep going down, it's just not true. It will happen.
Yep. I remember same sort of thing when I was out in Cape Cod with a friend of mine. We were on the sailboat, and we were just chatting away, talking about this and talking about that. Completely forgot to look at the sky, and the next thing there were clouds. We had no clue where we were. Thank goodness it's a good sailor and got us back in.
I grew up on a lake in Lake Michigan, and it was so deceptive because, you got a lake. But the people like me who grew up there know you don't go out on that lake unless you look at it like an ocean. I mean, this is serious business, and so is the stock market. So
absolutely. Thanks for calling, Scott. Folks, we'll be back. Dow's down 36, S&P's down 1.8. We'll be right back. There's going to be a bit of a bounce around here. Just trying to establish positions, but I think
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
So a couple of things. BX is Blackstone. I follow them, and I seem to always lose the data here. So it's ABCDE. The Blackstone Group is trading at 30.15, up $1.21. They must have had some kind of mention in one of the magazines or something like that, because that's what it looks like. I don't see any news on earnings. This is a group to keep on your radar. It's pulling back. I think it's going to digest. It's at 30.14. I think this pop-up is going to fail. It's got a resistance right here. Let me show you what I'm looking at in the daily. See that trend line right there? So it can go a little bit higher, but I think it's going to fill the gap. And I would be looking at it. Please, let's see, was that Peaky in the den? Yeah, remind me, Peaky. I want to look at this again. This is in play. The monthly chart says it's in play. It's in A, B, it's in leg B in the monthly. D, the weekly says it needs some time. That's all. So it's not a big deal. Maybe 8 to 7%, 8 to maybe 10% to the downside if there is a correction here. Remind me again, I think this is in play, but I don't want to do anything with it right now. Other than you're the type with a very long-term perspective. If you have a position, that's good. But if you want to start a position, say you're going to start it here. For you, looking long-term, because I think this has the potential to go to 36, 38, even maybe to retest the 44's all-time high, I'm going to say to you, you could actually start you tiptoe in right now because it's going to be the position that tells you whether or not the 29.48 to 29.30 area of support is going to hold over the next 2 weeks. If it holds, you've got yourself a nice little entry. So just get in so that you are positioning yourself for a play that my thinking is going to go higher over a period of 6 to 8 months. Okay, now let's do something else. I just wanted to quickly show you, I've got a couple of questions. I have time, I'll get to them. You see this pattern that I said? That's the right shoulder that held in the E-mini 10-minute, that held at about 7 o'clock to on the 10th. And then it went sideways. So I'm thinking this is the same thing. It's 2/3 down instead of 1/3. Call it 1/3. And this is going to be very important because the stochastic did turn around. The MACD is turning up and the histogram's improving. And this is the period where I think that the S&P has a chance to retest close to or even today's high of 2375 round number. Watch that closely. Most importantly, let me do this. Let me just answer questions here. Yes, the XPD I think is coming down. That's the XPD Select Broker, the broker ETF. Is coming down with Goldman Sachs. That's number one. Let me answer the question of Sarah. Yeah, the rut had a terrible day, and I'm watching the semiconductors. It hasn't taken out a buy stop yet. It's acting okay. I mean, there was this thing about an Israeli company being taken over by Intel, Mobileye, and that's very important. So that's helping a little bit. So semis are still in play right now. I'm thinking they will come down. I hope that our tight stop in our short position holds. And Julie, the question about XNG, I'm looking more at the UNG. It's a little different pattern. There's a large arch formation. I think natural gas can go a little higher under these conditions. Now let me get to what I wanted to talk about. Just looking at the questions over here. Yes, what I'm looking at here is this day. I spent a lot of time over the weekend that I had. The time I had, I said there are two conditions that we're looking at here in the 120-minute chart, and that is on the left side. Yeah, I've got enough time. I think we could still go to, if we go above 20,940, then we can think of Chapman wave 1, 2, 3, 4, and 5 to the upside. Not that high, making a leg B, and that'll be it for the 120-minute chart probably. Or we fail, and we will fail if we take out this low right here, the low that was made at 20,827 at 1:30 on the 10th on Friday. If that's taken out, then we're just making the arch formation. I think there's just enough strength to try to go a little higher, and then I think we'd come down a little deeper. Hey, hope you had a good day, and I hope you're having a good day, and I hope you have a good rest of the day. I'm kind of awake. Dow's down 22, and we'll be back tomorrow. And check out my opening call.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.